Joining us now, Labenfall Global Advisors President Dominick Tavella. Dominick, my apologies, my mouth is not working at 6:30, 6:13 in the morning. But what are you watching most closely with these kind of economic numbers coming out in the next couple of days?
You mentioned top of the list already, Dave. We got that consumer confidence number coming out later this morning. It's going to be disappointing compared to last month. People are really hurting. The gas prices, food prices, limitations in their travel. They don't want to go out and spend money. So we expect that number to be a lot lower than last month. But hopefully, this is just part of the cycle and we can pick it up later on in the year.
Ryan Payne, jump in here.
Dom, we're seeing the Fed actually, what they're doing is kind of working, right? We're seeing oil prices have come down a little bit here. If you start looking at copper, Dr. Copper has come down, which says economic growth is probably slowing a little bit. Lumber prices are down. Do you think the Fed's doing their job? And do you think later this year the Fed could pivot and get more dovish when it comes to interest rate hikes? And that could potentially be very, very bullish for the market and the economy.
Yeah, I'm actually happy you brought that up. The Fed is doing exactly what it said it's going to do, which is to slow the economy down. And speaking to a realtor, one of our clients recently, where they were having 10, 15 people bidding on houses. Now it's down to 2 or 3 people bidding on houses. So it's clearly starting to have an effect on the economy. The economy is definitively slowing down. Whether it's the Fed or higher energy prices, the consumers are starting to pull back on spending. And whether we like it or not, that means unemployment numbers might start to go up. We're seeing companies start to announce layoffs. So unfortunately for the average person out there that's trying to make a living, the economy is slowing down. And the key here is, do we get it to a point where we don't push it into a recession, where the Fed doesn't do too much?
Well, to Ryan's point, though, I'll note, I'm just going to channel my inner Stephanie Pomboy. The Fed doesn't have direct control or much control at all over the cost of energy, crude oil, gasoline. What's bringing prices down is just natural demand destruction, which you have seen in recent weeks and even recent months, Dominick. So based on that, are you still interested in energy? Where are you putting money to work sector-wise here?
Yeah, look, we follow XLE, the ETF on energy, and it hit a high like around 92. I think yesterday closed at 73. And I think that's fear that the economy will go into a recession. Obviously, people are slowing down their driving patterns, even flying patterns, because the expense has gone through the roof. But if we were to go into recession, price of energy would drop dramatically. I think that's a little bit overblown. And I think if we get any kind of an additional dip in here, I think it's a buying opportunity. I really do. China still hasn't even come back on board, full blown out here. And when they do, I think energy consumption is going to go up dramatically.
So, and to clarify what I was talking about, or to quantify it really, in the first world week of June, gasoline sales at U.S. stations were down 8% compared to the same week last year. That's the 14th straight week that sales have lagged behind 2021. This is according to the Oil Price Information Service. And according to the Energy Information Administration, the implied demand for months has declined with the average for 2017 to 2019. So it's really having a natural impact on high prices. Demand can correct itself.
The consumers definitely feel. We hear it every day from our own clients. They're choosing, hey, it's costing me an extra $25 a day for commuting costs. These people are choosing whether to spend money on filling the gas up in their car or buying food in some cases, the ability to pay their mortgages. So people are definitely feeling it. They're cutting back not only on their fuel consumption, but other ancillary items that perhaps they don't need to spend money on right now.
Do you think that the Fed eases up? Because that was the, joy, happy, joy last week in the markets. But the Fed's still got a almost $9 trillion balance sheet that it's got to draw down.
Yeah, this is the scary part, and this is why you have 2 camps in Wall Street. The ones that, we're going into this recession, the ones that we're going to float through, because that's ultimately the question. Because the Fed's looking backwards, right? They're looking at data, looking backwards. They're going, what's going on with inflation? What's going on with the economy? They're having to judge just how hard are they going to have to push down on these brakes. I'm hoping that they maybe do 1, 2 more take a pause, let this thing filter through the economy, and then we'll see whether they really need to get any more aggressive or they can take their foot off the brake here and just let us coast into the end of the year. I think that's the best case scenario.
I will note that the Federal Reserve, the Bank of Atlanta's GDP now was revised up yesterday to growth in the current quarter, the second quarter, of 0.3%. Barely any growth, but it's better than 0%, which it was before the slight upward revision, particularly after that better than expected durable goods orders report. Dominick Tavella, thank you so much. Great to see you, Dom.
Have a great holiday.
You too.